Hello, it's Monday the 23rd. I'm FxPlew and this is the market brief. So Reeves had some good news when January's public finances came in ahead of forecast. A £30 billion surplus was more than double this time last year and £6 billion better than OBR forecasts. Lower debt interest payments did a lot of the heavy lifting, but an extra £2 billion from self-assessed tax revenues, that also helped too. However, there's no time to rest on your laurels, Rachel. Economists reckon the Trumpflation shock from Iran could leave a £20 billion shortfall. Higher oil prices will drive up welfare spending and borrowing costs, and that will also lead to higher public sector pay settlements. And she'll need to get an energy bill bailout ready pretty sharpish too. There's no rest for the wicked. Over in the US, Powell has been on. He's still refusing to cut rates. He's refusing to step down from the board while the investigation is ongoing. And he's still getting under Trump's skin. Trump called him grossly incompetent for not cutting rates, and he has said he has Trump derangement syndrome. Now, I might have dropped out of med school, but any of the Trump syndromes sound pretty nasty if you ask me. Fed Governor Waller has been on. He was ready for a rate cut after the February jobs data, but the Straits of Hormuz has helped change his mind. Where higher oil prices will bleed into core inflation, he wants the Fed to adopt caution for the time being due to that looming stagflation risk. Meanwhile in the market, the dollar had a pretty volatile week and the dollar index closed around 99.50 before the weekend. Sterling kicks off lower against the dollar around 132.95. We're fairly flat against the euro around 115.30, and euro dollar is down on the open. That's around 115.35 this morning. Right, that's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.